Uranium friends checking in on ETFs, URA, URNM, URNJ. Let's get after a daily chart on URA. Yeah, so, during the rebalance and the dividend and everything, I said this chart was broken. Why did I say that was broken? Well, because, again, this moving average rider, and it's the 50-day and the 50 EMA. It's been the support guide since May 2023. It's been the guide. No reason for it not to be the guide anymore. So, yeah, it lost it there with a quick recovery. So, this is a one heck of a shakeout. Uh, one would assume that some truly technical people that had no idea what was going on in the space at the time got shaken out. I didn't get shaken out because I knew there was a pretty decent fundamental reason here. Not that I really trade URA anyway. It's really just a buying opportunity for me. I do have some actual traders on now at the moment, but regardless of that, that was broken. Quick recovery. We're here again, right? There's no true, I guess, quote unquote, fundamental reason why the ETF should be breaking this moving average rider, but there's not only is it breaking it, but it's now using it as resistance. Okay, so what what has been a support guide since May of 2023 is starting to become a resistance guide. Okay, so literally been riding it for almost a year, and now it's becoming resistance. That should spark anybody who follows these moving average rides. That should spark something. That should say to you, "Hey, there is now a true behavioral change if this does not recover rather quickly." Right. So, I mean, that's what I'm looking for uh, in short order. Because if it doesn't recover and it starts using it as resistance, well, I don't make predictions like some other famous technical analysts on in the space who constantly make predictions that are usually wrong. I don't do that. All right. I'm just telling you, there's a behavior change here. Now I monitor it. Right. So, in my opinion, all I'm doing is looking for my next long entry in URA. Right. And right now, don't know if there's an opportunity for that. So, um, it's bouncing on this the golden pocket, which is a good sign, right? But this is right at support here in the volume shelf, right? So it's right there. So this is good support. So first strike in the uh, Bears' favor right now is that uh, it's testing now from the underside of this metric that to me is very clear in this name, and it's rejecting. So what am I doing now? Well, I'm going to look for positives, right? So what's the positives that have occurred in the past couple of days? That's really what's important to me right now. Well, it took out yesterday's high, so it did breach that, which means it has set this low here. And let's just say, for all intents and purposes, that the low is right here. Get the perfect level for us. That's my low for now, and I'm hoping that holds. If it doesn't, we're gonna have to be looking down here as this next little level, right? So if we're really zoomed in, which we are now, which is only taking into account uh, basically the action from the beginning of the year, you've got some support here, right? So it needs to recover fairly quickly here. Otherwise, we have to start looking down here. It's just that simple. Weekly chart, weekly consolidation has officially begun. Yay, right? So, what does it mean when weekly consolidations fit? Well, this is weekly consolidation. It officially began actually in January or late January, right? Good bounce. That's all part of consolidation. but now it's just taking out that level again. So there's some forces. There's chop now, in my opinion, because we have some metrics that are support and we have some metrics that are resistance. So you just, in my opinion, it's a no action zone for me in any way, right? I want to see how all of this resolves. I'm not making predictions. I never will. I think it's silly, but okay, so let's see if we get a bounce. What could be the result of the bounce? Well, the result of the bounce, the probabilities are that it's a weekly low or high as compared to this level. One and two, there is an early pattern recognition type of situation going on here with your possibility of a weekly head and shoulders. So, even if I'm taking a trade in URA, I'm watching for this weekly head and shoulders as a result of the bounce. More so, as I shared in Chart Guy's room in the uranium channel, I'm watching this potential weekly head and shoulders because I'm in the CCJ trade. And if URA happens to get a weekly head and shoulders pattern start working, you can bet that CCJ is probably going to have some sort of rejection when URA rejects. So that's why I'm watching it. I tend to watch URA more than anything else because, as everybody knows, I am an advocate of liquidity, and institutions need liquidity. And this is if they want to be in the uranium space, it's likely they're going to be in CCJ, like Kathy Wood is, an institution. Segra Capital, Art Hyde, and Mike Alkin, CCJ, right? Institutional money going into spots where they can move around. They were in CCJ puts, institutional money with a good option chain. So it's, I'm an advocate of that. And that's the way I play. So we're chopping around here. It's likely going to be a chop fest, okay? Because there's some opposing forces working against each other here with this moving average rider and the Fibonacci golden pocket and the volume shelf. So it's got to resolve. And the way it resolves is going to dictate what other names are going to do, obviously, right? These are the ETFs that are controlling the space. So right now, this weekly, this low level, this level is set because of this nice little get over that high of the previous candle. But we've got a lot of work to do to start getting out of the situation that we're in. I don't normally look at these hourlies at least. Well, the tightest range I'll go through. So yeah, I mean, you've set an hourly high or low today. We have 3 hourly higher lows. I'm going to take off extended because it's pointless in here. So, and yeah, technically there's a trend change here, and there's no follow through. It looks a lot like the CCJ chart. Look at my CCJ video, by the way, and you'll see exactly what I'm talking about. So there is an hourly trend change here, right? So low, high, higher low, higher high, higher low. So we're looking for a higher high as opposed to this number, 29.49, and I bet you that would make a 4-hour trend change come into effect. Yeah. So, positivity there as far as that's concerned, but the multiple hard rejections on this moving average rider is slightly problematic. So all it does to me is say, hey, tap the brakes. I'm playing the CCJ move here, which is very, very similar. I mean, the charts look exactly alike on the hourly. So I'm playing CCJ for this bounce. URA gets the bounce, CCJ gets the bounce, good to go. All right. So that's URA. Let's see what Urnm is doing. So just in comparison, um, I'm looking at this level on URNM, which is the same as this URA level here. So URA has already breached it, right? So, you could sit there and say, maybe URNM is going to do the same thing, right? Don't know. There's a little bit difference here. This is more of a retail holding, and retail tends to hold more. This isn't, this doesn't trade as much. There was a famous, again, I'm not going to go into it, but there's another TA guy in the sector that's talking about gaps in the 15-minute chart, without really being too much of a whatever. Gaps don't apply unless they're on the daily. Okay. Gaps in lower time frame charts, all it means is that liquidity is a little bit shaky, right? So someone comes in and hits a market order and there's slippage, and that's where you get your gap, right? So, the spread could be freaking 20 cents. What do you think the market maker is going to do if you give a market order? They're going to take the top of the spread, and that's what gives you those gaps in the shorter term time frames. So gaps are meaningless unless they're on the daily. Okay, so whoever's listening to a technical analyst who's talking about gaps on a 15-minute chart, rethink that. Okay. Anyway, here's a daily, same deal. I want to look at this hourly to see if it looks like URA. If it does, it have that change also. No. URA has a little bit of an hourly trend change already. This doesn't low. And look, this is the liquidity issue, right? You see how it looks funky? That's because there's a lot less liquidity in URNM. All right, so low, high, higher, low, looking for the next higher high. That's what we're looking for here. So, 54, 53, 53 is probably a good level. Make us happy to see it happen. All right. So, URNM, same deal. It's got a little bit more work to do to be tapping on the 50-day on this Fibonacci retracement. So, in the respect of taking out supports, certain levels, URA has done it. URNM hasn't, and it makes some sense because, again, this is more of a retail holder. Retail holds this more. Institutions are going to be moving this a little bit more. It's just my view. Sure, someone's going to say I'm completely wrong, but whatever. Okay, URNJ, it's kind of a little bit more similar to URNM, which makes sense. You know, um, coming into some key supports here. This gap never fully filled, so I wouldn't be surprised if it fills. So, and crossovers here. It's just chopping, right? So, big volume, big gap in the volume to coincide with the gap in the chart itself. Your next support is down here at like the 2537, 2550 area. Golden pocket is down here, 25. Reasonable places where, I'm going to be looking to try to go long if it gets down here. And that's it. I mean, these ETFs are just kind of chopping right now. The space is in question, in my opinion. So I'm not really making it. I'm definitely not making any moves on the ETFs. I'm playing CCJ right now. We talked about the trade. It's in my video. It's a wait and see with these ETFs. They're obviously going to guide direction, and I think even more so, U.UN is going to be a factor. So we have to keep an eye on all of these things. There's nothing wrong with these ETFs. I'm going to come back here to URA and take a look at the weekly and a monthly real quick like. All right. So, yep, this rider, it's starting to lose it here, right? But it's getting tight, but it's lost that immediate weekly bull flag, but certainly a monthly bull flag. And let me just see if I'm going to work on this monthly bull flag. I'm taking it from the pole here, from the bottom of the pole. So, on this monthly and these fibs, it's just tapping the 23% retracement. So super, super healthy, super, super healthy. Even if it comes down to 26, super healthy. Personally, would prefer to see it because, when you get these little legs of consolidation after legs up, it enables you to get the next leg up. So you kind of want it. I know it's painful, but that's the way I'm looking at it. So you got a weekly bull flag, right? And a weekly potential cup and handle. What is a cup and handle, right? So, I mean, the true to the letter technical analysis analysts will say no, it's not a cup and handle, simply because it took out the left side high. I think the psychology is there. So if I start to see this chopping about for a while, we still have the bull flag. So what is a cup and handle? A cup and handle, here's your cup. And the characteristics of the handle is a bull flag, right? So it consolidates, it remains a bull flag, so it can make its next leg up. Cup and handles are continuation patterns. That's why you like to see them. And the higher the time frame, which we're looking at on a monthly, in my opinion, the more powerful and the better chance of them actually playing out. So I like it as far as that's concerned. I still like it even if it's down to 26. I won't like it as much if it comes down to 24, 24.50 area. Then it becomes questionable. So patience, patience is the name of the game. Over and out.